that said, let me welcome on board Shivangi Sarda as well. Shivangi, hi, afternoon. Good to have you on the show. Not done bad at all, at least the past two trading sessions, Shivangi. Does it seem like we could perhaps make a dash for the all-time high once again before we wind down for the year?
Very good afternoon, Aisha. Thank you for having me. So we've seen that these levels have quite a lot been a struggler for Nifty. We've seen attempts of the lifetime high levels twice in this span of 3 weeks. But of course, we've seen a little bit of call writers unwind their position as well. So overall, looks quite optimistic. We've come out of a narrow range from the weekly basis, and the kind of follow up that we are seeing is quite strong. Of course, today we're seeing a little bit of volatility because of the expiry, but we are expecting this momentum to continue. The good part is that there has been a good, RSI divergence on the lower time frame, and even though there has been a very consolidative session today, but then overall it is holding above 26,150 marks. So we are expecting this to continue towards the life high levels 26,325 and above. And we are expecting this index to remain a little bit consolidative, but a support of 26,050 would be a level to watch out on an immediate basis.
Okay, and Shivangi, hi, good afternoon. How should one read the move that we're seeing on the India VIX at the moment? Another 2.5% cool down over there, and now we're even below that 9.5 mark. What does this indicate in terms of sentiment in the market?
India VIX has actually made the entire option premium quite tricky because we've seen that it has actually started to trade in the single digit, and this has caused a lot of option squeeze. So this means basically that the premiums are very less, and as it is, its expiry, so time decay wasn't there at all, which made the options jump quite a bit in a consolidative band. So now, because of that, the option buyers and writers both will have a very tricky position to make money. Of course, strategies will work best in such kind of a market scenario, but to get premiums will become difficult. Now, talking about this scaling down of India VIX, of course, the bulls are in comfort, but we are seeing that as and when we are rising, above the index on the ladder, the band is becoming smaller because of the India VIX squeezing. So this will be a challenge for the option traders going ahead.
Shivani, can't get your eyes off from what silver is doing. Even as I speak right now, there's a fresh record being broken. That and its impact on names like a Hindalco and Nalco, Shivani. Shivangi, what's the best way to trade this silver move now?
Of course, metals have been shining and outshining, like ever. But we've seen that these stocks tend to do quite well in momentum. So of course, Nalco is one stock which has been on our radar, and we've recommended this one. It has been the strongest among the lot, and it has been trading in an upward sloping channel as well. This one would, of course, fetch a steady return and a slow and steady one instead, but we're expecting levels like 300 and then 304 for Nalco. Looking at the other metal pack, Hindalco is also one of those stocks which has been giving good amount of return. In this year itself, it has moved around 45% till date. So overall, quite a strong counter, and we are expecting on an immediate basis 1,000 and then 1,000 1100 odd levels for Hindalco. So these could be kept on radar.
Shivangi, trick question, but what's looking like a stronger chart? Gold, silver, or Nifty?
Absolutely a trick question. And, equity might be the evergreen thing to have in your portfolio. But of course, silver and gold have, outperformed as well. We've seen that, the gold silver ratio of late has sunk, which indicates that silver is going to outperform in the next few, months, I would say. So definitely out of the gold and silver, silver looks more positive. But of course, Nifty has, of course, also outperformed. We've seen heavyweights doing, much better than the other counters. So my focus would be on silver and the heavyweight counters in our index in the equity market.
Right, and Shivangi, let's talk about some year-to-date moves and the exuberance that we've seen in the Nifty PSU Bank basket. Yes, off late we've seen a little bit of a cool-off on that front, and it's the private banking names that are taking all the action ahead. But what is your take on PSU banks? Roughly 27% higher on a year-to-date basis. More legs to that rally for 2026?
Of course, the entire PSU banking space stocks have been the hero of the year. And we've seen that these stocks have moved by almost 50%, the good ones, of course. And the momentum is still continuing. The good part is that follow up is quite strong here, even if we are seeing consolidation at the higher zones. But the good part is that there has been consistent buying here. CanBank is one such stock which has kind of performed at on a month-on-month basis. It has continuously made higher top, higher bottom, and this is one stock which could be kept on radar for a portfolio stock. Of course, if we want to go for a SBI, that is strong as well. But then we'll also have to see that on a year-on-year basis, this has moved comparatively less because of the kind of position that it holds. But definitely, CanBank is a much better pick in this space.
PSU banks, it is. But Shivangi, as you look ahead into the year, where is it that you see the strength pockets? And would you say the bottom-up stories are looking more attractive? Case in point being, the way the move on IT is played out in the last few months.
Yes, of course, Aisha. IT has been one of the stocks or the sector which has come in limelight of lately, especially after the movement of the dollar that we've seen and the kind of export import values that have been affected. But overall, I feel IT has been one sector which has moved to again fall. We've seen that most of the heavyweights or the mid cap names as well, they have kind of attempted to show recovery, but then they've overall failed, and on year basis they are trading almost flat. So on IT we could use a wait and watch approach here. But then again, the other sectors which are looking quite good are some of the diagnostic name stocks. And apart from this, of course, banking and auto continues to remain strong, and the focus should be, on these stocks as well. Especially in the auto names, I would like to focus on the two-wheeler space stocks.
Okay, so that's those are some pockets that are looking good on the charts going ahead. But we'll keep the conversation going on the other side of this very short break, and we'll be right back.
But we're closing trades right here on ET Now, and we're closing in quiet for the day on Nifty expiry, although we've inched up a little bit, definitely from the session lows, but not as meaningful a move purely in terms of a bump up as you had both on Friday as well as yesterday. Today, of course, it's Chola Finance. Shriram puts on another nearly 2% on the futures. Cement as a pack is doing very well, along with Ambuja as well as Ultratech holding out well. HDFC Bank has made a decent move. And then, of course, some of those railway-related names are looking good. Metals, of course, have continued to hold up very well, and some stock-specific movers as well added to that pack. But we've got Varun Sabu as well joining in on the show right now. Varun, hi, afternoon. What themes look attractive for 2026 to you?
Yeah, team, thanks a lot for inviting us again on the show. Honestly, we are very, very positive on the markets. If you recall, the last time when we came onto your show, we were extremely positive on Indian IT, and that theme has played out quite well. Going forward, what is looking very good to us is the banks across the BFSI space, actually. And also, we are very positive on consumers now. We were very positive on the discretionary consumer space, which we still remain. But incrementally, we are getting positive on certain FMCG names also. There has been this GST cut, which has clearly shown how growth is panning out to be in auto names, particularly that we saw. We are very, very sure on things would reflect in the consumer pack also. But the categories have to be nascent, where you have new age portfolios, where you have unpenetrated categories. That's where one should focus on. The couple of names which we like over there are Godrej Consumer and Marico, which we'll be very positive on. And apart from that, as I mentioned to you, we're very positive on financials as a space. We would be positive, we'll be quite positive on Axis Bank, Kotak Mahindra Bank from here.
Okay, so it's the banking space that's looking good to you. Varun, very interestingly, you pointed out some themes within the consumption basket as well. You've spoken about auto, but what about discretionary? And let's talk about white goods particularly. The weather has not been particularly favorable for these names in terms of the monsoon that we've seen. Winter has been harsher than expected. Where do you see some of these names like a Blue Star, a Voltas, and also let's throw in a PG Electroplast in the mix? Where are you seeing consumer discretionary goods in terms of these white goods headed in the next year?
See, nowadays all seasons have been quite severe, right? It's not only to do with monsoon or with winters. But we need to keep in mind these are great stories over a period of time. Penetration in the country in terms of white goods is also quite low. Near term, yes, probably a quarter or two, the stocks might not be in favor. But I really think that you have these plays as a great long term play. Summers again could be harsher. Eventually, whenever we see things, whenever there is a lull, which is right now there, is a good time to accumulate these names because the stocks are coming at a big cut, right? You mentioned about PG Electroplast. The stock is already down severely from its highs. If you don't accumulate them now, then when? I would seriously think this is a great time to accumulate these names.
Interesting. That's the word coming in right now on what discretionary is looking like. But Shivangi, on the charts, what about names like an Asian Paints, which are finally coming out of their 2-year-long hiatus, and the other ones like a Britannia within the entire, larger discretionary spend basket, which have been, showing leadership in any case? Shivangi, you'll have to unmute yourself.
Yes, so out of the two names, we've seen that both of these stocks had actually become a little laggard of lately, and we've seen Britannia of lately has seen good amount of short covering move. Of course, on a long-term perspective, Britannia looks quite promising and better, but overall, I think momentum is much more in Asian Paint for the immediate basis. So if someone is looking for a trading perspective, then Asian Paint would be a much better stock to look out at. Of course, the crude oil prices have also had an impact on the stock, which has kind of led the up move in the last 9 weeks. So this one's definitely to keep on radar.
Okay, so those are some of the stocks that are looking good. But Shivangi, let's talk about some of the small cap stocks that are doing very well today in trade. Something like Bellrise Industries. I don't know if you've been tracking this stock on the charts. You have Anthony Waste that's doing well on the back of an order win. So is GPT Infra Project, Sangvi Movers. So a bunch of the small cap names are doing well. Shivangi, do you have a view on any of these?
We've kept a close watch on these stocks, but overall, these stocks have actually kind of gotten into good momentum. Overall, if we look at individually on a larger time frame perspective, these stocks have just started to move ahead, and they've been in a laggard manner from quite a long period of time. So volumes have, of course, risen from the last three sessions, but I would still, go for a wait and watch here and go for better momentum stocks.
So wait and watch approach on some of these small cap names that are making all the buzz on the street today. And in fact, amid a market that is largely tempered, just take a look at what the small cap index is doing. It's inching towards a 0.5% move right now, 0.4% higher on the small cap space. And this is the only pocket of green that we're seeing in the market for now. We still have about 20 minutes of trade left. So let's see where the Nifty ends up for the day. But Varun, let's talk about one stock and in fact the entire sector. It's Puravankara today. That's up and above 15% on the back of land acquisition. On the back of this, give us your overall view on real estate. What kind of moves are you expecting going ahead? Because we've seen a mixed bag. Some stocks have done well. Some stocks have been absolutely tempered. What's your take on real estate?
See, real estate has space. If you see, they generally have a 7-8 year kind of upcycle. the cycles last longer, right? It's been about 3-4 years of good cycle that we have been in. Plus, if you see when we talk about inventory, how things have been, if you really go out searching for inventory, say in the commercial space, you're hardly getting any. There's a crazy rally happening in commercial rates that we're seeing. In terms of residential, also the ones which one actually wants to buy is not available easily. So there is a lot of demand. Obviously, it has to do with a lot of wealth creation which is happening in the country. If you see all the asset classes, be it gold, silver, even equities to an extent, have been in a good run for a long time, and all these things help when it comes to real estate demand. I think real estate still looks to be a very attractive space with a 12 to 24 month view. I would still think that all of these names are looking good to me in this space.
Okay, so that's on real estate. We've spoken about FMCG, IT, realty, pharma. We've also spoken about some of the metals. But let's talk about the kind of moves that we've seen on a year-to-date basis in something like a Hindustan Copper, Hindalco, Hindustan Zinc, Nalco. Of course, some of them have been recent movers on the back of silver touching an all-time high. And for someone like a Hindustan Zinc, about 30 to 40% of their revenue comes from silver. Varun, any view on some of these metal names on the non-ferrous side? Or if you're preferring the ferrous space, how would you be playing the metal space right now, given the kind of run-up that we've already seen on a year-to-date basis?
Yeah, so we are one of the few houses who has coverage on Hindustan Copper also, and we had initiated coverage a while back. You've seen crazy rally happening in copper as in on the LME. You're seeing copper prices shoot up significantly. You're seeing silver prices shooting up significantly globally, and that trend is not seeming to stop. There is obviously a clear shift from dollar being the reserve currency of the world to other precious metals, seeing that kind of buying, right? There's a shift happening clearly. That's what is reflecting in the stocks here. Plus, the way dollar index has been coming off, it's always positive for metals. I think till the time this trend is on, and I don't see that changing anytime soon, commodity stocks are going to remain in favor, especially the precious commodities.
Interesting. Okay, that's the view coming in the commodity space. But Varun, I think, it's important to also figure out what's looking like it's, reached its peak, at least in the near term, or the best could be behind that sector. Any trend that you're picking up?
See, honestly, IT has had a pretty decent rally recently. One will have to wait and watch on how things pan out going forward. I believe this could be a good time to trim some IT. We have been very, very positive on the IT space, as I mentioned to you. Just that the rally has been pretty sharp, and there is still this fear of AI, how AI is going to pan out, how Indian IT is shaping up to capture that, etc. It's just that I understand that AI could be a big opportunity, but one will have to see how that shapes up, right? The recent rally gives you decent enough gains to book for now, and probably one could wait and see another quarter or two, see how the revenue growth is shaping up, how order booking is flowing further, what the outlook is coming. So probably it could be a good time to trim some IT and look to, as I told you, look to add some financials, discretionary consumption, FMCG consumption, and all.
And Varun, want to get you in here. I know we are driven to talk about equities, but what about the multi-asset strategy which has worked out all through 2025? Do you think a similar portfolio allocation is going to work in the year ahead too?
In my view, one has to go heavy on equities now, particularly Indian equities. We have seen the broader index yet to perform. It has been weak, quite weak for a while now. While we're seeing earnings growth, etc., to remain pretty good, sharp, we're expecting the second half to be even stronger, and the outlook going forward to be very strong. We have seen decent enough run in gold, silver, and I'm not saying that the rally is going to stop. But the major compounding, the major uptick which you're going to get is in equities now across the broader indices. Unfortunately, people have been concerned around the trade deal not happening. There have been concerns around how things would shape up in terms of earnings, etc. But nothing has changed. Things have only turned out to be better. The steps like the GST cut, the tax changes, the rate cuts by RBI, etc., are significant positives with a 2 to 3 year earnings compounding per se. I would be very positive equities, and I would really recommend people to go heavy on equities, shift exposure from other asset classes to equities for sure.
Okay, so Varun, on that note, while you're very positive on equities, would it be the larger end of the market where there is relative safety compared to the broader end, or do you believe that there are still some stocks where valuations are looking very attractive from this mids end of the basket, and they could be the high performers of next year?
The bigger thing has been that valuations in the mid and small caps have become more attractive. If you see the larger caps, they have done quite well, and they will continue to do well. It's not that larger caps are any expensive; they're also quite reasonable that way. But the mid and small caps has gone through their own pain in the last 12 to 15 months, and that's where the opportunity is lying. Plus, now that investors will start rolling another 12 months forward, you will start seeing stocks being way more attractive again, right? So I'll just give you an example. One of the names being Dixon. Dixon was a stock which people used to find it to be very expensive at one point in time. Today, that stock, if you look at on a FY28 basis, it is now available at some 37 times earnings, which is nothing for a stock where earnings are expected to compound at 40% CAGR. So there are names which are looking very attractive from that per se. And one has to really draw the screener right. Great management, great businesses with strong earnings compounding. That's where you have to put your money in. And a lot of mid and small caps are having that opportunity, honestly.
Well, and talk about what happened in the primary markets. How can one ignore that all through 2025? And it seems like 2026 also is going to be a big bang year for some mega IPOs which are awaited. And as you can see on your screens, that Oyo's parent, that's Prism, has got an IPO nod now. So it seems like it's going to be sometime early 2026. Who knows what the exact timing is going to be? Of course, this has been something in the offing. Not just Oyo, but you've got NSE and many other marquee names, Zepto, which are all touted to IPO in 2026.
Absolutely, and it's going to be very interesting to see what happens in the quick commerce space once Zepto is actually in the market as a listed player. Of course, we've had reports recently that say that even if Zepto becomes a listed entity, it's not going to change a lot of market share structure for the other two listed players, because it's been quite some time that they've had to consolidate market share as a listed player. Varun, do you agree with this view that we've seen coming in from one of the brokerages recently, saying that Zepto's listing would not have a material impact on the existing other two quick commerce players?
See, honestly, I don't agree to that. Share price per se, stocks would consolidate for a while. Reason being that competition getting money is never healthy in this space. And that's where the worry is. But if we talk about the cash balances which are already lying, say, with an eternal, it's in a very strong footing, right? It's not that they'll be able to impact the market share per se a lot to the larger players. But the point is that any kind of competitive intensity coming in any space doesn't let the stocks do well, right? So I think there will be an impact to the stock prices. Stock prices would remain probably here because we've already seen one round of strong correction happening here. But I don't see any reasons for any near-term upsides in these names for sure.
Right. Okay, that's the take coming in right now on what the primary market action is going to be like. But as we wind down for the day, one is seeing a pretty sedate market as opposed to what you had at your hands both Friday as well as yesterday. That's Monday. So while we are closing in at the session highs, it's been a very narrow band that the Nifty has flickered in at. And yes, 26,200. Roughly around that mark is where the Nifty futures are currently. The star performers, of course, have got to be Shriram Finance. The way the stock has actually moved ever since the MUFG announcement came by, last 3 days, you've had a large cap stock as this one, which is not quite typically high beta in nature, move the way that it has. I don't know if we can bring up the 1 week chart. Perhaps that would give you a better sense of how the last 3 days price action has been on Shriram, absolutely flat. And then in the last 3 trading sessions, you've had almost a 13% move coming in on this particular counter. ITC held out very well today. And then, of course, Tata Motors Passenger Vehicles as well has done its bit along with Bajaj Auto. Shivangi, come in on the charts of autos and especially the PV segment. While it's all been about M&M and Maruti showing leadership, do you think Tata Motors PV can finally play catch up in the new year?
Um, Absolutely, Aisha. Auto have been, some one of those counters which have actually gained up quite a lot of momentum, and of course, seasonality-wise as well, we see this quarter tends to do quite well for the auto space stocks. But of course, the outperformers have been Maruti and the two-wheeler space for that matter. But talking about Tata Motors, this stock has kind of showed a little bit of lackluster move. So I would still go with the outperformers, which is Maruti and TVS Motor for that matter. These have been consistent players. Apart from this, one could also focus on a Bajaj Auto, which has also been slightly more volatile, but on year-on-year basis, it has also done quite well. So these are the names that one could focus on this.
Okay, and Varun, from the hospitality space, we were just talking about how Oyo's parent has received that SEBI approval to start its IPO proceeds. Where are you seeing value, or what's looking good amid the hospitality space? Because on one end, you have the big names like IHCL and ITC hotels. On the other side, you have some of the more value-focused names like a Chalet, a Ventive, Lemon Tree. Where are you seeing a growth momentum, or where do you think one can see attractive returns from the hospitality space?
So I totally agree with you that we are more positive on names. Others have had their fair share of run. It's not that your room rates are going to shoot up significantly from where they are. There'll be average inflation. So there was a time when we saw significant rally in the way the room rates turned out to be, right? But that's not going to be any more the case where a very, very significant bump up comes there. Obviously, these are great compounders and they will compound over time. But the immediate upsides will be the names which are right now a little cheaper in terms of valuations. One space one should keep an eye on is the luggage space, where we believe that there is some traction coming up, something like a Safari, etc., where things are looking to pick up in terms of the industry. So could be interesting to look at those names if one has to really play the luggage side.
Right. Okay, that's the take coming in on what some of the interesting pockets could be. But for today, of course, Coforge has seen a fall of about almost 5%. There's been Mazgaon Dock as well, which has fallen a little bit. And largely, one would say some of the movers from yesterday, Infosys being one such case in point, that's fallen about 1.125%. Bharti as well has fallen about 1% after that massive move in the stock yesterday. Eternal, Bajaj Auto, Trent, TCS, ICICI Bank, SBI have all managed to close in the red as we speak. But Shivangi, on the charts for some of these names, Trent, for instance, quite the bottom-up case, one of the rank underperformers all through last year. What's in store for it this time?
Yes, I agree that they have been quite underperformers from a really long period of time. But then again, the kind of recovery attempts that we are seeing on a recent basis is also, not very substantial for the stock to move, quite a lot. We've seen that a stock like Trent has moved down by more than 40% on a YTD basis. And even though we are seeing that from the last 3 to 4 trading session, there has been a good support near 4,000 odd levels, but follow up is clearly missing in these stocks. And call writers have actually jammed their position, and which is why it is making the upside capped. So, this one requires a lot of unwinding and short covering move to again move ahead.
So that's the tail on trend that we've seen a sharp cut. Varun, what about DMart? Because that stock, yes, some quarters have been okay for the stock, but overall, structurally, it's starting to look slightly weaker compared to some of these new e-commerce and quick commerce plays. Do you think DMart has what it takes to compete against these newer and emerging platforms, or do you believe that the run-up that the stock had seen is now behind it and it could take some time for recovery?
See, DMARC is, if it comes to be, if you're talking about say longer term, if you're talking about 2 3 years hence from here, uh, all these disruptions, as I mentioned about what is happening in Eternal and all these cases, they're going through some kind of near-term disruption which is there, right? Similar thing is happening in this space where the online digital, all of these platforms are impacting things to an extent. So yes, near term, probably things could be a little difficult, a little tricky with a 6 to 12 month view. But one has to keep in mind that DMart is also coming up with their value proposition in terms of the online delivery also. And apart from that, they have their own stores. That's the biggest strength which they have. It's their own asset, right? And the kind of bargaining power they have with suppliers, no one else has. And the discounting which DMart provides, I don't think any platform provides, and will not be able to provide over a period of time. There could be capital which people can run with for some time, but not over a longer period. So DMart is a great asset to own with a 2-3 year perspective. And it's one of the best compounders which one could have in your portfolio. But near term, yeah, there could be some pressure on it.
Okay, Varun, appreciate that view. And Varun and Shivangi, thank you so much for your time today. But on that note, let's take it across to my colleague Ashesha, who's waiting.